Hello, this is Dale. In this video, I'm going to be talking about common traits that successful traders have. I think if you can emulate as many of these traits as possible, your chances of becoming a success in this very difficult arena become greater. One of the references I use is an excerpt from a speech that was given by Jack Schwager. Jack Schwager is the author of the Popular Market Wizard series, where he interviewed successful traders. And this speech he gave was on the 7 winning concepts of the super traders. I think it's good to know these, and I'm also going to refer to another book that talks about some of these successful traits, and then I'll summarize at the end. The first one that he came up with is you need to find a method that fits your personality. Are you a day trader, a swing trader, position trader, or do you just want to buy and hold? And that strategy, you need to be comfortable with the drawdowns that are going to occur with that strategy. And that means you have to either back test it or trade it with a small account to get statistically sound data on the number of winning trades and losing trades, and do you have a profitable strategy? Every system will go through losing periods. And one of the problems that retail investors have is that they lose faith in some strategies during these bad periods, and they're not there for when a recovery occurs. Let me just show you on the next slide our return on margin from 2019 through the coronavirus scare until present of 2020. We're talking in May of 2020. You can see this is a positive expectation trading strategy that I teach and I trade by. But it does have losers and it does have losing streaks, and you have to embrace these losing streaks to be there to continue with the strategy to recover. Even during the coronavirus scare, we had a drawdown, but we have recovered since then. Let me go back here. There you go. Sorry. The second thing is the concept of hard work. The general public is attracted to the markets as an easy way to make money. The markets are not an easy way to make money. You don't just pick up a book on brain surgery or become a concert violinist by reading a book over the weekend and performing surgery or picking up the violin on Monday. It just doesn't happen. It's going to take a lot of hard work. It's going to take hooking up with a mentor that has done it before. They can cut your hours down that you'll need to become a success. And finally, you'll get to the point where good trading is almost effortless. And that's but the preparation to get to that point is the hard work. I mean, you look at any profession, look at a golfer, and their swings are just so beautiful, and it makes it look effortless. If you picked up a golf club before, you know it's not easy to accomplish. It takes a lot of time, takes a lot of preparation, a lot of hard work. Number 3, money management. Most professionals do not trade more than 1% of their portfolio per trade. And, I teach the proper trade size for any portfolio, and that can be seen in my YouTube 12-part series on how I trade, and I'm going to be showing you that in just a second. But you need a profitable system and then you need to be conservative and trade according to the amount of money you have. Money management alone just doesn't work. You need a profitable strategy. Number 4, winning. The study of hedge fund managers, the best only have about 63% of winners. Even ones that win year after year will only have 50% of investors who make money. And this is a common trait that retail investors have. You have a drawdown, you have a period of losers, and you jump out and you don't give it time for recovery. This is a recurring theme that appears time and time again. And the other thing is, once you have a strategy that works, don't try to optimize it, because the more you optimize it, the greater chance it won't work. You want to keep it simple. You want to keep a nice, simple strategy. Number 5, you want to be independent. You have to follow your own mind. You don't really want to go against like a Kramer or somebody like that. But you have to follow your own mind, even if they're saying something different. And the other thing that kind of goes in parallel with this optimization is when you start combining methodologies, it's usually worse than a single. I mean, a single strategy that is shown to work and is simple, you can get in and out. It's got good entry rules and good exit rules is what you want to follow. Patience is the 6th one. Amateurs go broke after taking large losses. Professionals go broke after taking small profits. Okay, so professionals wait for a trade, and they wait while they're in a trade. They let the trade evolve. Now, if you start losing, you want to cut those losses short. But if the trade continues to make money, you want to stay in there. And one of the tools I teach are Fibonacci's that show you when the trade might be overextended and when it's time to get out. The patience is seen throughout nature. Let's take a look at a cheetah. Cheetah is the fastest animal in the world, and it can run down any of its prey, but it will stay in the weeds and stalk a herd of antelope. And it's not just going to pick out any antelope, it's going to pick out a weak antelope, and that then becomes the prey. He's being patient. They're being patient, and that's what you want to do as a trader. Now, the 7th one is confidence, and that comes with staying with a good strategy and watching it have a nice positive equity curve. Most money managers keep their money in their own funds because they believe that's the safest place. They have confidence in themselves. They know that they're going to win before even putting on a trade, and that doesn't mean they're going to have winners. It means that when they have winners, it's going to be more than the losers, because losing is part of the game. Amateurs need to be right, and if it does go wrong, they'll stay in it a long time, saying, well, I'm going to get out when it breaks even. That's not the way to do it. You have to have an exit strategy, and when it goes against you, you have to have rules to know when to get out. And finally, successful traders love doing what they're doing. They are passionate. These are very positive traits. Now, another book was John Boyk. His book was called Lessons from Great Stock Traders of All Time. And he went back in time and looked at traders like Jesse Livermore, Bernard Baruch, Gerald Loeb, Nicholas Darvas, and William O'Neill. William O'Neill is the editor of Investors Business Daily. And this was from a time span from 1895 to 2005. And here's what he came up with in summarizing those very successful great traders. Number one skill required that was common to all these traders was their strong work ethic. And that comes through time and time again. You have to have a good strategy, but then you have to work at your craft. You have to go through losing streaks. You have to go through winning streaks and not become overly happy at that, realizing that things will, go up and down. Each learned that experience was key, and that experience goes with the strong work ethic because experience comes by spending many, many hours. It's commonly referred to as your learning curve. The third point was by following strict rules, they were able to control the emotional part of trading. Emotions can be a great killer to the retail investor. You have the attitude that, how dare the market go against me? I analyzed this to the T and it just doesn't work. The market doesn't care. The market goes up and down. It's fueled by fear and greed, human emotions, and you need to have strict rules to get you in and out because the market has its own behavior. The most important discipline is to do your own research and not listen to the opinions of others. And that was true on the other report we got by Jack Schweiger. Here's another common one: being in the market all the time is not prudent. You got to be patient. You don't. Shouldn't be a need for action. This is not a gambling casino. You need to be patient. You need to wait until you see a setup. You need to follow your rules to execute the trade. You need to exit when you've got a loss or exit when you have a nice profit. And that means you have to have strong rules and not worry about being in the market at all times. Of course, here's the number one trading rule. You want to limit your losses and cut your losses short and let your profits run. And that's a very common theme. Well, how do you do that? Well, you do that by having very strong exit rules to know when to cut your losses short, but also let your profits run if you've got a winning trade. So in summary, of all the research that I've done, there's some common traits to successful traders, and the number one is strong work ethic. And there was a book called Outliers, and in that book it talked about if you want to become a professional, you need to be willing to put in 10,000 hours of work. 10,000 hours of work. Now, if you hook up with a great mentor, that time can be dropped considerably because you're learning for somebody that has done it before. You want to embrace losers. However, you want to cut your losses short and let your profits run. And this is the Fibonacci's and measured moves to show when the market is going against you. I explain all that in my YouTube videos. Patience is one of the common traits. Follow your own trading. Don't listen to others. Find a strategy that works and stick with it. Don't overtrade your account. And have strict entry and exit rules to keep your emotions in check. Now, what I like to do is just go over and show you what I'd like you to become is a subscriber to my YouTube channel. You can just go into YouTube and type in Dale Brethauer. Last name is Brethauer. I am a professional trader. I've been doing this for 35 plus years. I also am founder of www.optionsinfinity.com, where we have a community of people that learn how I trade, and they get trading alerts when I make a trade, and for stocks, credit spreads, weeklies, monthlies, leaps, and Forex. But if you click on this button, you can become a subscriber, and I've got over 25 educational videos. And this one right here, and I'll have that posted at the end of here. You can just click on that. It's how I trade. And basically, it is a 12-part series that goes through exactly the Fibonacci's and the measured moves and the regression channel and how I get in and get out of a trade. It shows you some examples of trades, shows you how to look at realistic expectations. What can be your expected returns for a certain strategy? It's a very popular and very educational YouTube series. So I hope you follow some of these traits and follow me on YouTube, and to your success. Bye-bye now.